That chair's a little crooked.
Calling the meeting to order at 3:01, and welcome to our auditor. And so we'll call to order and go for approval of the agenda. Yes, first, second, thank you. Any changes? Hammer, anything? Peter? No, we're all good. Okay, no changes to the agenda. All in favor of the agenda? Aye, all around, unanimous, carried. Thank you. Public participation, there being none. Minutes. A month ago. Pretty, again, the pretty concise, right to the, very crisply written. Thank you to the team for that. I have no changes.
Nor do I.
Nope. Right, none. Nope, everybody's good. So I would put forward a motion to accept the minutes as they are. Thank you, carried. Business arising, since that was a strategy session, and the takeaways, which were in the new business item 8, that was for staff to do, so we'll leave that with staff. Unfinished business, I don't think there was any, which takes us to reports. Peter, anything from staff? Welcome back.
Thank you. Really?
No, I think he's just asking if you want to add anything, or like there's
no.
nothing there. So.
Nothing?
Okay.
Okay, so the mayor has nothing in his absence. Nothing from me. Fred? Nothing. Jim? Nothing. Committees, we're probably going to talk about that tonight. So nothing there, which brings us to new business, and welcome. Are we welcoming Mr. Cox to the table?
Yes, we are.
Mr. Cox, come on down.
Thank you.
Mr. Cox, you have the floor.
So I guess we have two documents. I see you have a letter from us open there, and I think the financials are in the package as well.
Yep.
Oh, yes.
Do we have a preference for which we do?
Did you want a hard copy? I'm sorry, I didn't.
Oh, no,
okay. Yeah.
Okay, you're all good? Okay.
For that. Do we want to hear from auditors or go through financial statements first? Looks like everybody has our letter open, so why
Yeah,
don't we, why don't
okay,
we do
start
that?
with
Why don't we
that.
do that?
Okay.
Yeah, that's the best thing to do.
This is the new and improved version.
Well, it looks like there's more improvements to do based on the
No, no.
metrics there.
Well, I just hadn't read all the stuff where we saw the adjustments that were.
I don't touch this one. I mark the one up on my computer at home.
I'll, if it's appropriate, I'll go through and I'll hit a couple of highlights in here. There's a few things that we need to talk about each year. Hopefully, I'm not too repetitive. I'm on page 4. Page numbers in the bottom right, and you don't have them. They're not numbered differently in your agenda package. No, okay, good. This is sort of a summary of some of the key points. Probably the most important overall is the second line in the table here that says status of the audit. So it says, as of the date of this report, we have substantially completed our audit. So that means we're 99% done. The takeaway is clean audit opinion, no issues, access to all the information we needed, written information, computerized information, great help from your staff in getting this all together, so no issues at all. You'll probably remember this, but the reason why you don't have a signed audit opinion to go with the financial statements is the last part of our process is completed after council actually approves the financial statements. Then we go away, we have one more talk with lawyers and do a couple of things we call subsequent events review. Then we'll issue that. So that's why we're 99% done, not 100% done. But no issues or concerns, but a couple of things to talk about. I do want to mention the page after that, in the middle of the page, we talk about something called materiality. Very important audit concept, and it says here our final materiality level was $54,000. What that means is that our audit opinion is really saying we believe the financial statements are fairly stated, plus or minus $54,000. The reason why we don't say plus or minus 0 is because then we'd have to redo every single transaction all year, which doesn't make a lot of sense. You have staff that do that. So that level is set by audit standards based on the size of your budget, basically. So any local government anywhere in Canada audited by any firm ends up at about that materiality level. And what we do is when we're doing our work is we keep a list of any differences or areas where we disagree with your staff on numbers, and we add those up in the list, and as long as they add up to less than 54,000, we're good. And we do disclose our list in this letter a little later on, which I'll get to in a minute. On page 6, 7, and 8, there's a couple of, I guess it's sort of like a table with the gray and the green here, which I think somehow are our firm colors. I think that's why we get these weird colors here. What we do, there's an area here called audit risk areas, and this is areas where we spend more time than we do in some of the other areas. So there's a lot of numbers that go into your financial statements, as you know, you've all seen them. There's a lot of numbers there, and we don't audit all those numbers equally. There's more time spent in areas that are complex or have some estimates involved or have a great volume of transactions. So more time in those areas than other areas. And audit risk areas means to us, when we're planning the audit, that if something goes wrong in any of these areas, there's a greater likelihood of there being a material impact to the financial statements. So we better make sure we spend more time on these areas. So it doesn't mean it's a risk to us as auditors for making a mistake. It's not a risk of funds going out the door or anything like that. I don't think I'll go through all of these, but I'll just give you a flavor of some of the different areas that we look at. The first one is my favorite one, and I'm sure I probably pointed this one out last year too. I try and do it at every council meeting that I go to, because I just love the wording that says management is in a unique position to perpetrate fraud. It just sounds so lovely. But this is something that we have to consider in every audit. So nothing personal against your management sitting at the end of the table there, but we have to consider this in every audit, and it's very important because it sets the tone at the top, or the culture of the organization. And there are organizations. We don't see that many in local government, but there are organizations where there's people at the top that are real high flyers, or you know, particularly in a private company, we'll have the president that will say, you know, I founded this company, gosh darn it, and I get to do whatever I want in this company. Well, in that sort of situation, it rings a lot of alarm bells for auditors. So we don't see that often in local government, but something we still have to go through, and really the point of what we're doing is making sure that everybody in the organization has to follow the same rules and processes and controls as everybody else. And we do that, and we didn't have any issues from having gone through that. I thought maybe I'd also just mention the second one here, revenue recognition, for a couple of reasons, because you'd have to be an accountant to appreciate this, but because to non-accountants it sounds very easy, but revenue recognition, which is deciding when to record a revenue in your financial statements, is one of the most difficult accounting theory sort of areas. Non-accountants will just say, well, as soon as you get the cash sheet, you got revenue. But the reason why it's complicated is that until something, if you receive some money, say from a developer or something, if there's strings that go along with that, that means the village has to do something, well then it's not really it's not your money yet. So there's certain areas where this revenue recognition can be difficult, and there's some judgment, and we say here grants are an area that can be a difficult one, because you have your restricted grants or unrestricted grants, and have you met the terms of those grants? So there's some time taken to think about that. Also, what goes along with this is when we have seen frauds in the public sector, often what happens is somebody trying to get away with siphoning some funds out of an organization. Somehow they have to get it in the accounting records, and often where they tend to park things that they think won't get seen is in deferred revenue, which is it's a liability that shows on the books, and I think non-accountants or even accountants sometimes when they look at a statement they just go deferred revenue. Well, that's not really anything, and they don't focus on that. So it's a kind of a good. I shouldn't tell people how to do fraud, but it's kind of a good place to hide things where they're not too likely to be to have the same scrutiny as, you know, if you start having big charges to your bank account, people notice that. Charges to deferred revenue, people don't notice it to the same degree. So that's a long way of saying that it's an area that we do focus on. I won't go through the other items, but they're similar. There are estimates involved, or their staff salaries, for example. That's your biggest single type of expenditure. So we spend more time in those areas than others. On page 10, there's a section called fraud discussion, and this is sometimes a little uncomfortable to bring up in a meeting, but it is an audit requirement that we were hoping nobody would notice that. Only on the 2 pages.
We're not the city of Victoria?
We might have used another letter as a template.
Can't believe it.
Fraud, so...
Like that?
Auditors have a weird relationship with fraud. If you look at audit standards, it actually says in our Bible, which is written by our profession, that auditors are not responsible for detecting fraud. And it's a little unusual, because I think sometimes non-auditors think, well, that's the only job that auditors have, so what the heck are they doing if they're not finding fraud? And we went along with that as a profession for years, and then we started to realize that there's a real disconnect between what people thought we were doing and what we're actually doing. So in the last few years, ever since some of those big corporate failures in the US, we've started to change our focus a little bit and consider where the fraud risks in an organization are. And that involves doing a couple of things, some special testing that we do. It involves asking management if they're aware of any frauds or illegal acts, and it also means we have to ask the same question of counsel. So, and you don't necessarily have to answer this meeting, but if there are concerns that pop up, you know, whether proven or not, that you think there could be some money going sideways at Municipal Hall, or legal acts of kickbacks or anything like that, it's good for the auditors to know that as well. So we ask that question to management, and that's important, but we also want to ask that question of you. And on this page here, I think I've put my, it's not like I really need the glasses, they're just for style, but it is, I do have my email address in here, so if anything pops up, please email us and we'll take that into account while we'll do the audit. And I think the last thing to speak to before we look at numbers is, oh, I guess maybe two things. Maybe I'll just quickly point out Appendix D, which is on page 22. This is something called unadjusted differences. So I mentioned earlier our materiality level is $54,000, and that means that we can live with differences of up to that amount. The actual total, which is the right column at the bottom, which is the impact on your income for the year, the actual total is $11,000, which is not much. And far and away the largest item in there is employee sick accruals, where you taken a more conservative approach in the way that you account for those than the accounting standards would have you do. So the net result is very immaterial, I think, is the takeaway. Now, finally, the last thing is Appendix C, Management Letter, page 24. This is a letter that we write to your Director of Finance, or Treasurer, or CFO. What title do you like?
Oh, CFO.
CFO. Okay, so we write this to you. Oh, it says that in the letter. So we write this letter to your CFO, and these are points that come to our attention while we're doing the audit. So our job is the opinion on the financial statements, but as we're doing our work, sometimes we see some best practices or some control ideas or things that we think you should consider changing, and that's what this letter is. So we write this to the CFO, but we've copied it in this package for your information. This starts on page 25, where we follow up on recommendations that we had last year. So anytime we make a recommendation, we always follow up to see if it was implemented, or perhaps there's reasons why it couldn't be implemented. We had 2 points last year: one, approval of timesheets, and also approval of expenses in the fire department. And I think we saw good positive change in both of those areas. I think fire in particular, I'm not sure how to say this politically correct, but I think if you went back a couple of years, there was a few things going on that maybe made them seem not as much of the team as they should be, and I get a sense now that it's really one big happy family. I don't know if that's overstating it or not, but I think there's been a lot of positive change there with that. And then on page 26, a couple of current year observations. First one is a tough one. This is in regard to bank reconciliations. And the reason why it's a tough one is because you have a very small office, as you know. So we recommended to Peter that you have a accounting staff of 15 people. He said no, and that's something to do with budget concerns.
Maybe just a bit.
I'm not sure. But the point I'm trying to get across is it's difficult to have perfect internal control in a small office. You just can't do it. So in things like when you do bank reconciliations, you should have somebody do reconciliations, somebody else review and approve it, and that does prove a challenge in a small office. But I thought in italics here we have the management response to the point, and I thought this was a good response. It says, due to the small size of the village office, there's only 2 finance staff, both of whom are in this room. The municipal accountant prepares the accounts payable, checks, and floats the deposits. So for segregation of duties, the CFO completes the bank reconciliations. So that's explaining the situation. For 2017, though, we'll implement a policy that requires reconciliations to be signed off by the CAO, who has lots of free time to do that. I still think that's a value, though there's something about another set of eyes looking at things, even though I know accounting might not be your first love, but it's still valuable just to have that look and to know that obviously we have no concerns about the CFO. We always look at this from a position, not a person point of view, but if there was a CFO here that was trying to do anything untoward, just the fact that they know that the CEO is going to be looking at the reconciliations, it's helpful.
What exactly is the well-informed CAO looking for, since once he gets the 4 inches of checks dropped on his thing, and I'm sure the CFO is going to prepare an attestation stamp and all the rest of that stuff, so he's going to thumb through the checks, and I can't imagine actually reconciling them.
Definitely not gonna.
I mean, I get where you're going, but I mean, the reality here is that he doesn't have a lot of time, and that's not a good use of his time, so is this more of a needle in a haystack, hope for the best kind of thing?
I think there's two things. So, the CFO is going to get the detail, there's no doubt about that, and the CEO certainly doesn't have time to go through the detail, we understand that. So there's two things. One is, just the fact that he's looking at it is going to scare off, for lack of a better word.
Maybe you don't know how steely our CFO and our finance.
But the other side is that it's difficult to keep things going for a long term. If you do have, and hopefully you'll never have anybody that's trying to do anything on the board, but if you do, it's difficult to keep it going for a long time. So I think the kind of things that Peter should be looking for are unusual things, or things that are there all the time. Well, every month there's always this $10,000 miscellaneous adjustment. Why is, kind of those unusual things. So it should be, I shouldn't joke about your lack of time, because I know you are really busy. But it should be a very high level, sort of what looks unusual, sort of review. So I think that's what we're thinking.
I'm sure a lot of times stuff will stick out like it does in my business. It's just like glaring right there, right in front of you, and you don't, and a lot of people don't see it, and and I'm sure that's what would happen with Peter. He would see it right away.
Yeah, something doesn't pass the smell test, or
yeah, that's right.
Ask an explanation. It doesn't quite sound right.
And I've seen the bank record too, so.
And our second and only other point for this year is in regard to receipts for revenue transaction. There was, I think there were not many, if I remember correctly, but most items were receipted, and there was a couple of items. Oh yeah, it says that here. Silent auction purchases. Staff response here. Management will again review the cash receipts procedures with staff to ensure that everything gets received and followed up. And that's just a good accounting double check. So for both of our points mentioned, action coming in 2017 from staff, which is great. And I think that gets us to the end. As I said at the outset, the overall clean audit opinion, access to everything we need, no issues or concerns from our point of view at all. Shall we look at the numbers?
Okay.
Yep.
So what I did based on discussion with your CFO is I just circled a couple of things to talk about in regards to numbers. Obviously, of course, any questions you have, bring them up. Sure, I don't know all the detail, but we've got CFO here and Haley here, and Haley has every transaction for the year memorized. So any real detailed questions, I'm sure they can answer for you. But what I'll do is speak to some of the highlights of some of the things that I just sort of circled in terms of looking at these financial statements and trying to understand your overall financial position. So I'm starting on page 4, Statement of Financial Position. I circled a couple of things on this page. I always start at the bottom of this page, because this looks a little bit. The format of this is different. If you're used to looking at private company or financial statements, there's always a balance sheet and things balance. The way this is presented is a little different. It actually doesn't balance to anything. Well, it sort of does. It balances to the next page, but it's a little different trying to understand what it's saying. So it comes down to the bottom line on this page. It says accumulated surplus $20,357,350 at the end of 2016. So that's a huge number, and unfortunately that terminology, the word surplus, is what the accounting standards people would like you to use. I think it's a bit of a misnomer personally, but because it sounds like there's $20 million of cash lying around, and there isn't. So that's why you got to go to note 9 which shows the breakdown of this thing called accumulated surplus. And the takeaway, I think, from note 9, which is on page 16, the takeaway is that out of this $20,357,000 we call accumulated surplus, far and away the vast majority of that is something called invested intangible capital assets, $18,415,256. So that's far and away the biggest chunk of that. And what that represents is money already spent on infrastructure, roads and cables and computers and water and everything. It's already spent, so the cash is gone. And this is why I don't like the word surplus, because surplus sounds like you got cash. Here the cash has been spent long ago, but it hasn't been expensed for accounting purposes because we expense it for accounting purposes over the life of the assets, and some of these assets have very, very long lives, and that's how it gets expensed. So it hasn't been expensed, but the cash is out the door. So I think that's the number one takeaway is you're not $20 million wealthy. The other components of accumulated surplus are important amounts. You've got reserve funds, $783,000, and unrestricted, which is your operating funds, $1,158,539. So those are really the amounts that you have available for spending, and some of the reserves even have some restrictions on them to some degree. So so you're not quite as wealthy as you might otherwise be. But when you look at in note 9, when you look at 2016 compared to 2015, reserve funds up a little bit, and the unrestricted amounts up $400,000. So that is a good trend. That is positive, and you are in a little better financial position than you were at the end of last year. I'm popping back to statement of financial position again. Probably the other item on this page, it's another thing that you don't see in a private company financial statement. That's a line 2/3 of the way down the page called net financial assets. The math behind that, you can probably tell from reading this statement. The math behind that is we take our financial assets at the top of the page, and financial assets are anything that is cash or will turn into cash. So it's cash, accounts receivable, grants receivable. And we subtract off all the liabilities that we have, including amounts we owe suppliers, long-term debt, deposits, those sort of things. So if we cashed in all our cash, paid off all our liabilities, we'd be in a net financial asset position of $689,867. So that is a good financial indicator number. There's many local governments that are in a negative position there, that they have more liabilities than financial assets because they've usually when they've funded infrastructure with long-term debt, and they're intending to repay that over a very long period of time. But you're in a positive position, and you can also see it's gone up from last year $99,000 to this year $689,000. So a good increase there. So another indication of positive financial health, which has been sort of a combination of a positive result for the year in operating and paying down some debt and paying off some liabilities as well. A combination of that improves your financial health overall. That was really all I circled on this page. Anything else you'd like to point out?
No, it was just the reserves which we spoke about, so yeah.
Okay. Let's also look at the next page then, which is statement of operations.
Actually, I've got a question.
Oh, sure, go ahead.
Bill, it's for Pam as much as anything. Why would the sick overtime and wellness vacation payable go up materially relative to its small number?
It goes up mainly because of the sick time, that all the staff accrue sick time, so that's a chunk of it, and vacation as well. Not all the vacation was taken in 2016, but the sick time tends to go up every year. And that's actually one of the adjustments, unadjusted differences we have. We tend to expense all of our sick time, but you can't take your sick time with you. If someone leaves, then they don't get their sick time paid out. So there's an argument to be made that we don't actually have to book all the sick time, but we choose to. So it's a combination of sick and vacation going up.
So it's much as because we've retained all of our staff, the number's gone up in sick time?
I don't so much retain, because everyone, even new employees, get sick time. It's just,
Okay.
I mean, I've accumulated my day week and I haven't taken any sick time. So it just continues to go. Unless you take it, you continue to accrue it every year.
So staff are not being sick enough.
We're not sick. No. We don't take holidays.
Maybe
so
you
we have a
can,
bigger.
maybe you can fix that for next year. Okay, statement of operations. This is a, you're more used to seeing these revenues and expenses, but this is what the accounting standards require, very summarized, high-level basis. You can see, for example, under the expenses, we just see general departmental expenses, water, sewer. So everything's grouped very tightly for purposes of this statement. And another accounting requirement is the 3 columns. So the first column is the budget for the year with a little bit of adjustment. That's why it says there's a reference to note 7. It's a little bit of adjustment because your budget's sort of on a cash basis. How much cash do we need to raise? And the financial statements are done on more of an accrual basis, where, for example, capital assets are written off over their useful life. That's one of the adjustments that needs to be done. So that column there has been adjusted from the budget that you actually passed to take into account to harmonize it with the accounting principles that the financial statements have to be prepared in. So, for example, it says, in the budget column, it says the annual surplus you budgeted for was $50,295, even though you passed a balanced budget. It's because of some of the ins and outs. And Note 7 actually shows sort of reconciles how you get from the budget bylaw you passed to those numbers there. So we've got the three columns: budget on the left, actual in the middle, and then the prior year on the right. So probably the greatest takeaway here is the annual surplus, and again we have to use that word surplus, which is the 3rd line from the bottom. So you were budgeting for, after having adjusted the budget to the accounting principles, you were budgeting for $50,000 surplus, and the actual was $252,001. So basically 5 times what you're budgeting for. That sounds good that way. And when you look at where that comes from, really, it's the expenses, where all the categories, general, water, and sewer, are all under what had been budgeted for. So a good, that is a good result. The other thing that I circled on this page is the government transfers line in the revenue section. So government transfers is another word for government grants. And you had budgeted for $707,000, and the actual is $530,000, and that's really to do with what you hope to get approved and the capital you hope to get done in terms of what you actually
Yeah,
get.
it was mainly the Build Canada and the fact that we had to defer that project and it's going to be completed this year.
So that was all I circled on that page. Is there anything else, Pam, we should
Nope.
point out?
Again, I was just going to say the favorable expenses, we followed that, we discussed that in depth at the 4th quarter review. It was some things that maybe had been over budgeted a bit, some consulting fees which we adjusted in the 2017 budget, and again, just lower spending. Sorry, lower spending items that we rebudgeted in 2017. So there was some items that had to be rebudgeted.
Sounds good. I think, I don't want to go too long. Often, if there was some new accounting requirement or some new note disclosure required, I would point that out, but this is actually a bit of an anomaly year that there's no new accounting standards that have to be implemented this year. So there's really nothing there. I guess I always, although I don't think there's anything surprising or unusual here, I think it's always good to read the contingent liability and commitments note, which is on note 6 on page 14. And these are all some of these items that are listed. When you're part of the GBRD, you assume some joint and several liability for some of the functions that you participate in. Same thing when you're part of the MIA. So these are noted, but these are not unusual things. Most local governments would have similar disclosures in their financial statements. Same with the ECOM, although I think we sort of expanded the disclosure there.
Yes, this year a little bit. Mm-hmm.
So, but that's, again, that's the same, that all municipalities that participate in ECOM are going to have that same sort of disclosure. Number 4 is borrowing with the MFA. Again, it's all sort of joint and several borrowings. So if the city of Burnaby defaults on all its debts, and all other municipalities do as well, Lions Bay will be on the hook for everybody. Not like they have, but possible. And part 5 to that note 6 is litigation, and as I'm sure you're aware, there's a suit that's been kicking around for a few years that's written very generically here in regard to employment matters, which is still not resolved yet, as I'm sure you know. And then also in that note, there's just sort of a general disclosure that there are, from time to time, lawsuits do come up, but there's nothing that is looking like it's going to have any materially adverse outcome at the moment. And finally, I think the very last schedule I would point to is Schedule 1, something called combined combined statement of operations by segment. This is an accounting requirement to because the statement of operations or the income statement is so summarized. The accounting standards people want us to have somewhere where we break down different categories of expenditure. So this is on page 18. And I think there's some good information in here, because this breaks down the revenues and expenses by general government, protective services, public works, and what you get when you get to the bottom. And by the way, there's a typo. There's an extra line. I don't know what it shows on everybody's.
Where's that going?
Oh no, it's just I guess the way that I printed it, I have an extra line in the revenue section on mine. So it looks like that's been corrected already. But this shows revenues and expenses by each segment, along with a bottom line. So the first column, for example, general government, is a real profit center because it has a profit of $788,980. Well, the only reason for that is because that's where all the tax revenues show, so you sort of have to ignore that. But what that means is the other columns are sort of showing how much, this is way too general to say it this way, but how much they are subsidized by general taxation. Shouldn't really use that word subsidized because that's not quite fair, but I think you get some interesting results. So for example, you see protective services minus 178,000, public works minus 334,000. Kind of makes sense. Those areas aren't supposed to pay for themselves, but it's good to see it that way. Or something like park recreation and culture, 2 columns over, minus 146,000. So as I'm sure you already know, there's no attempt for user fees in those areas to cover all the costs that are there. But this just sort of puts it in black and white. And then also you see the water and sewer utilities that are more or less paying for themselves, which used to be a legal requirement. It's not a legal requirement anymore, but it's a good practice still for those areas to pay for themselves. And they are. The other thing you get from the groupings on this page is, this is really the only place where you can see the total salaries and wages, which is in the expense category there, labor. If you go across to the totals on the right column there, you see total labor 1.2 million to 221, and that compares with previous years on the next page, whereas 1,148,000, so gone up a little bit, not too much. But this is the only place you sort of get those kind of detailed comparisons that you can see. So I think it's always a good page to dive into and take a look at. And that was all of the sort of high-level things I circled on the statements. As I say, I think the takeaway, good audit results and improvement in financial positions. So kind of good news all the way around.
Okay. Any questions, Jim, Fred? No? I have none. With our thanks, Bill. That we received the verbal, I guess, well, got the statement, so then they'll surface again tonight. Thank you. Just move on. No public, so no questions. Motion for adjournment. Thank you. Done. We're closed.
Just payments.